Well, Bitcoin just put in its second highest close since the collapse began nearly 3 weeks ago, up $12,000 from the bottom, nearly 25%. And if you just came back from your summer holidays in Europe, well, you wouldn't have missed anything. The price has been basically the same for the last several months, but that doesn't mean the emotions of the market have been stable. Very, very different story. The emotions have been absolutely wild. The bear traps have been out in full force, and a lot of the bulls have also forgotten what it's like to be on top, what their profits have been like. This particular crash, this particular market seems even more crazy than Ray Gun making it to the Olympics. It's just an instant gut reaction. You're at your home of macro cycle analysis. It's me, Jason Pizzino. We're going to cover Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. All right, let's just kick it off straight from the start with where Bitcoin's price is at. I also want to look at some of the signals that we saw last time where Bitcoin tripled in price. It also doubled in price with the same signal. So there's some pretty big things coming up, some big volatility. It's still quiet times. I suspect people are just starting to get back from their summer vacations. All right, so BTC, last 24 hours, again, testing the elusive $61,500. We've been talking about this level for weeks now. Basically, it's the major 50% level from the $74,000 top to the crash low now. So through this crash here, I had no idea we're going to crash to $49,100, but I don't think anyone did. And that's not the idea of the game of trading. The idea is to assess your risk and figure out whether you're still in a bull market and whether your trading plans are still to the upside, or have we failed here? Is this going to be the start of a major decline in a bear market? That's basically what your job is as a trader or investor. You basically just need to be on the right side of the market for the length of time that you are basically trying to trade the market in, short term, long term. So right now, what I'm seeing is another retest at the 50% level, 61.4, very, very important level. And, if we do fail here, well, look, the downside is still there, 55.9, call it 56. And that also lines up with the May bottom, which was 56,500. You got the 49K, you've got the 53.5K. There's still plenty of price support to the downside, but the real tackle here for the bulls, at least, is to get back above 61,400. What we saw in the last couple of weeks is recession fears climbing. So as Bitcoin dumped, as the stock market's dumped, the recession fears crept right up. So that's thrown a lot of people on the sidelines, not investing in the market or getting out of the market at, again, the worst possible time. I did a video on this basically just yesterday. The dumb money sold the bottom. Dumb money referring to retail. It's just terminology. Let's not get too offended by words here. Basically, there is the extreme search volume for recession at that low again. It's basically died off. And the last time we saw that was in February. So there was another move on the markets there in February. And then you have to go all the way back to the previous lows in the market. You've got June 2022. And then October was the next, well, was basically the price low. So when the search term for recession, I'm looking at worldwide here for the last 5 years, has peaked, it's typically been around some significant lows or very close to the low. So in this case, it might not be any different. We saw it just again a couple of weeks ago with recession being searched very heavily. And as I said, the dumb money is sold out again at the bottom. Here is an article just a day after the low. Institutional investors bought the dip. Retail traders sold aggressively. Now this goes through the numbers on how they're figuring out where the retail investors sold and where the institutions bought. So we can leave that for another video, or you can read it yourself, check out what Yahoo Finance, but essentially just looking at how the dumb money does it every flippin' time of selling out at those lows. Now, I've got Bitcoin here on the 5-year chart worldwide. I'm going to reference a couple of these points here because the search volume for Bitcoin is dropping off. We're at 20 now. We had that in June as well, around 19, 20, 21. And then if you go back to last year, September and October, the search volume was around 15, 16, and then it broke out. See December 2022, sitting around 18, couple of weeks there at 18. It also dropped off in October, just before that final flush out with FTX collapsing. That's the FTX collapse right there, that peak. But yeah, down at these levels, you're at 16, 18, same sort of thing again. Looking back at those exact times, Bitcoin broke out, and this period here of that search term doesn't really range much, 18 up to 24, and the highest peaks here about 27. So that's the search volume. Bitcoin doubled in price. It doubled through this tiny, tiny period, then did nothing. It ranged between $25,000, $32,000, then went on a tripling through that period there. So we'll come back to this chart a little later on. What we also saw was dumb money selling out at the lows again, looking at the fear and greed index for cryptocurrencies, which have basically rocketed up today. 26 was yesterday, now we're at 39. It's a 50% jump in the market sentiment, jumping all the way up to 39 here. And basically the price of Bitcoin went from 59 to 61, $2,000, 3.6%, jumping right up there again. And within bull markets, as I went through in this video here, so just the most recent one, I'll leave a link to that at the end of this video. Make sure you are subscribed to the channel so you can see these on an almost daily basis. Basically, those lows happen to be reasonably good accumulation periods for the bull market. Just remember the words I'm saying here. I'm not saying it's all the time, and I wouldn't use this as a standalone trading system, but it has a pretty good system built in to look at the market sentiment and try to do the opposite at the extreme times. Not the entire time, but at the extreme times. So use it if you want. Don't use it, entirely up to you, but it's pretty simple. It doesn't catch the exact low. It's not what we're trying to do. We just want to get in around the low, get out around the tops, and just ride the middle part for as long as possible. So that was yesterday's video. If I haven't already, hit the like button, subscribe to the channel, and we've got a flash sale happening today for TIA Premium. Just use the link in the top of the video description, subscribe to the free crypto and economic report, which you would have received this week already, and then you'll receive the sale email starting today. So that's for TIA Premium. Get your discount now. The US dollar, which continues to fall. This is its fourth straight day down, and maybe you've heard me say it before, but I think we are still in this movement of a bear market for the US dollar over this second half of the real estate cycle, which for the real estate cycle, not Bitcoin, not the stock markets, the real estate cycle and the economy, I think peaks somewhere around 2025, 2026, based on the 18.6 year cycle theory. So I've looked at this. The US dollar typically comes down. Again, I've gone into great detail with the US dollar and how that looks here in the first half of the cycle. Then you get the mid-cycle slowdown. And then in the second half, you basically get that collapse in the US dollar. It's happened every single cycle. I don't think this cycle is going to be any different. And as soon as it breaks down from roughly around 100, so between that 99 and 101, then we could potentially see it move just that little bit quicker to lower prices. And over the long term here for the US dollar, lower highs continue to form and lower lows on a macro here over decades. So it doesn't happen overnight. If you're looking for this thing to turn around in the next few days, maybe it does. This is looking at years upon years, and that has been the trend now for the US dollar over many, many decades. You can come all the way back here into the early 80s, mid 80s, lower highs, lower lows. Let's move on to the stock markets now, and the fear and greed has crept up. The stock market has been absolutely skyrocketing from here. It's within 1.5% of a new all-time high price. It's been up now for 1, 2, 3, 4, 5, 6, 7, 8, 9 straight days. And if you are a fan of our Gann analysis, Gann says roughly around 7 to 10 days in the same direction of higher highs and higher lows. We're not looking at red days. He doesn't refer to red days. We're looking at the price action itself, which is more important. Higher highs, higher lows. Generally, you'll see at least a pause, sometimes a correction, change in direction for the trend. So obviously this trend is up, and maybe you'll see some sort of change in trend roughly around now, 7 to 10 days. But nonetheless, it has been up now for about 3 weeks. There is the low there. 17 days, so 2.5 weeks. And going back 2.5 weeks, I don't think there was one person that would have thought that this market would have jumped so much in that time. For the S&P, from the low to where we currently sit, it's up 10%. And for the Nasdaq, it's up 15% in the same period of time. Doesn't mean that the corrections are over. It doesn't mean that it can't come back and test some of these lower prices, because of course the volume has also been dropping off a little on this rally. But nonetheless, these lows seem to be the significant low in play for now. And look at where they came in, dead on one of the major 50% levels. And then you've got the higher low and then the breakout of the next 50% level. So things are looking relatively good, even if there is a further correction. You'd need a much worse narrative, a much, much worse news item than what we saw at that low to break down from this low. And I know there's always people that are looking for those extra worse narratives, the dollar collapsing, the interest rates coming down, you name it, there is something to get people fearful, but that's what happens in a bull market, as we've tried to show here in a wall of worry. There's always a problem at each of the significant lows, and then the market continues to rally. Until there is all good news, we won't see a top. So we need to see all good news. That's when tops come in. Just think about Bitcoin and crypto going back to March. Where was the bad news? I didn't see any. ETFs buying every single Bitcoin out there. Michael Saylor buying every single Bitcoin out there. There was no reason for the market to drop, but of course it did. That's what happens throughout every market, throughout every top, throughout history. Gold, no different. All-time highs as well. So I just want to update that. Some people are into their gold, and this is also continuing up. Second half of the real estate cycle, commodities continuing to surge to the upside. And on that note with commodities, let's take a look at Bitcoin. And the fear and greed index, as I said earlier on, is at 39, up from 26 yesterday. And the fear, getting close to extreme fear from last week and the weeks prior, where we dropped down to 17. We've looked at this before. The masses selling those lows, getting very, very fearful. Hopefully you're in the position where you're able to snag some of that BTC. If not, just make sure you're not the ones that are buying the peaks. And the way I see this playing out, masses not being prepared for this next stage of the bull market. I still think there is another leg up. Some may disagree, that's okay. They'll be interested again when Bitcoin hits a new all-time high price. So you'll start to see some of that interest flood back. And I'm talking about attention in terms of interest here. So the attention to the market. And then they'll probably wait to buy as Bitcoin moves to higher prices. Maybe when it breaks through significant psychological levels like 80,000, 90,000, 100,000, then they'll start to really see some FOMO. It seems like masses love to accumulate when the prices are exceeding other levels. It's like the sheep all start running for the same piece of grass at the one time. Speaking of that grass and looking at this doubling or tripling of Bitcoin, how this is going to happen, the average true range, as we've looked at before, continues to sink here. And that is just an average of the last several days here. You can see the last 14 days. So as those trading range bars squeeze, they get smaller, the average true range of the bar or of this indicator here drops off. And typically when we see this drop off, it ends up at some sort of support level and then goes on its next move from there. It's happened throughout history. You can see each of these times, and then this layered on top of the extreme fear that we recently saw, and then layered on top of the Bitcoin search terms at near lows yet again. I think it's just building for this perfect storm for another significant leg up, which then goes to what I was saying earlier here. The masses will be interested again when BTC hits new, fresh all-time high prices. It's just something to talk about, and then they'll wait for higher prices to get in because basically they're not ready yet. That's the first time they hear about it when it's at $70,000, $80,000, and then they're like, maybe I should go and buy some. So then they have to set up their exchanges, they have to transfer money, they have to stuff around with that, they have to talk to their wife, see whether their wife is saying it's a good idea or not because they're obviously getting in way too late. And then eventually they start to buy some as it peaks yet again. Shit themselves when it corrects, sell out, and then the whole thing continues to rinse and repeat. That's the way I see the market, and it's happened every flipping time. Let's take a look at the longer term here for BTC. And this is the tripling and the doubling from these breakout points. So basically this stealth mode that I've talked about previously, where you see the interest drop off. So as we've been covering here, the market sentiment on Google search terms, those trend words. You can see the market's sentiment also in the fear and greed. So that basically dips pretty damn hard. Then you see the average true range drop off, as I also showed you. And then also in the volume here, you can see the volume drop off on these corrections, but it pick up on the move to the upside. So that's also another good sign that the market is preparing for another significant move. And in terms of the price itself, well, as we saw at those lower levels on BTC, so going back to 2022, there's October, November, December, so through here, and then that move up there into March, where it peaked out through April, roughly $30-ish thousand. Basically, Bitcoin went from $15,000 to $30,000. Then again here, you've got October, so we're coming into that period now, into March, tripling there. There it is on the price chart, 25, 74, and then 15 up to roughly $30,000 there. Now, there are a lot of you that watch the videos regularly, probably tens of thousands according to the views. And so you might recall that at the beginning of each month, I'll do a monthly recap of what I think the market might do over that coming month, but more importantly, over the next sort of 3, 6, 12 months based on some of the data and the price action that we're seeing on the charts. We looked at this for Bitcoin, that when July is green, typically, not always, but often, August is also green. But if it's red, then August is also red as well. So you can see back in 2023, you had a red July into a red August. Didn't happen in 2022. There's July green and August red. So it's not a 100% thing, but often you see it happen. July green, August green. So now it's Bitcoin is roughly 6% away from being green, which is only $3,600. It's not impossible. There's still 10 days to go, so a third of the month left, and it might get very close. Maybe it ends up red. But nonetheless, there was almost no chance of that happening 2 weeks ago. I thought that this was going to be an outright, like absolutely red, no chance at all. Gets pretty close. I'm okay with that. Yes, it's not going to be green. Doesn't matter in my opinion, as long as it closes above $56,000 to $58,000, these swing bottoms here, then you've got more buying action coming into the market after the price action has flushed out those longs. You've got the move to the downside and the nice big buy back. How does that look for the crypto market? Well, we've got total crypto market cap here, basically still in its choppy range, but also testing the next level's 2.1 trillion. And then the strong area here is above 2.2 trillion. You see that on the chart. That's the major 50% top to bottom, bounced dead on the bull market 50% range. There's your top, there's your bottom, sliced through the middle is roughly 1.7 trillion and hit that level and is now bounced back above, getting back above the previous significant swing bottoms again. So they're the key levels that I watch for if you want to see the strength return to the market. So we did see this big sell-off. Yes, it could continue down, get rejected under these levels and continue further. So far, we're seeing some stability above key levels. That's what you want to see, especially as the price still consolidates underneath the next key support level of 2.2 trillion. So this is where I think it's going next. It's going to be heading to 2.2. Sure, it can do anything in the meantime, but I think as the bull market is still on, obviously in my analysis, my opinion, then the next level we're heading for is over 2.2 trillion. Now, to reach over 2.2 trillion, we'd need to see the largest altcoins head that way as well. Ethereum sitting above 50% still, so $2,500, and that $2,500 is the bull market range. So a little weaker than some of the other majors out there like Solana, but nonetheless, it has come back, tested this price zone of the ETF news back in January, and now sitting above $2,500. So the next level for it to tackle, $2,900. Going to be a major, major key level for Ethereum to break back above for that sign of strength, moving into what I'm looking at as the fifth and final wave for the Bitcoin and crypto bull market. ETH, BTC, struggling here, continuing to get rejected at 50% levels and then close below 50% levels, which suggests that the strength is probably going to come from Bitcoin to keep pushing the the prices up for the total cryptocurrency market cap. Obviously, this is all the cryptos, including stablecoins. And so this movement's probably going to come from Bitcoin as the ETH BTC chart continues to show some weakness. Now, Solana BTC is also showing some weakness. So Bitcoin seems to be really stealing that spotlight. And that's typically what you want to see for the next run up, right? So Bitcoin steals the spotlight and then some of that money starts to flow back into other altcoins. Hopefully, you've been able to pick up some of the stronger altcoins that are in better positions than the others, putting in higher lows, sitting above key 50% levels of their bull market range, sitting above some of the key price zones of 2023. If they started to tank underneath 2023, probably not the greatest for the next stage, because then they'll have a lot of overhead resistance. Nonetheless, back to Solana BTC here. And in the short term, now I'm looking at the daily stuff here, you can see it just break down from some of these key swing lows. For the short term, that is. There's still the higher swing lows on the chart here and the 50% level. So if Bitcoin does go on a run, it might put some pressure on Solana BTC. The USD chart might be able to hold its ground here and just not go anywhere. But the Sol BTC chart might cop a little bit of a hit here. Ideally, no closes under this swing bottom here, so that my rather not zone, that's basically the 50% of the bull market. And at the very worst, there's the danger zone all the way back at 0.0012. So if you are pricing Solana against Bitcoin, well, if Bitcoin's going up, then you might still see the Solana USD chart remain the same if Bitcoin's going up and the Sol BTC chart is going down. But if you just focus on USD, no worries. Still above 50% here, still above 109, and still above this entire area back here. So nothing to worry about at this stage, still in a pretty strong position. Now, there's always going to be altcoins that slip through the cracks, just like some breakdancers getting into the Olympic Games. However, watching the charts on a daily basis will hopefully get us closer to some of those elusive 50x, 20x, 100x returns. Guys, the flash sale is on for TIA Premium today. Make sure you subscribe to the free Crypto and Economic Report, link in the top of the video description, and check out some of the results that our traders are crushing it with right now. Great work to Anthony, 100%, James, 160%, 70%, 60%. This is all using the education that we teach in TIA Premium. So get on board now. I'll see you guys over in TIA Premium if you do sign up. Otherwise, I'll be back here with another video very, very soon. Until then, take care and peace out.
Yeah, for the boys. Okay. Well done, boys. I'm good.